Good evening, everybody. Welcome. Thank you for coming. I am Big Cheds. This is Making Bread with Cheds, episode number 6. This is being put on by Benzinga. So I want to say thank you to Benzinga. You folks should hit like and subscribe. The point of this show is we want to talk about crypto. I want to make it relatable. I want to make it understandable. I'm an educator. I'm a trader, Japanese candlesticks, classical charting. I also think a lot about trading psychology and risk management. And I actually did just publish a book, Trading Wisdom, 50 Lessons Every Trader Should Know. We'll talk a little bit more about that later. You can find that on Amazon. So, Bitcoin's a fun ecosystem. You can just trade Bitcoin. You can trade altcoins, but there's so much more beyond that. So we have a very special guest today, Alex Krüger. I hope I'm not mispronouncing that name. He's a fundamental analyst. I love to kind of hear what he has to say about the market. I tend to think about the idea that the price discounts everything. The price bakes everything in. So everything is baked into the price, rather. So I don't have to think too much, try to figure out really what's going on behind the scenes, because the price is the truth. The price decides. And we'll kind of see how that plays out. So if we want to go ahead and show my screen, I will jump right into the technical analysis. We are looking at Bitcoin here on the weekly chart. We have several things here. We have moving averages. We have an 8-period exponential moving average. An exponential moving average gives more weighting to the most recent price action. This green one, for example, the 8, you may have seen like a 12. Like I think Coinbase uses 12 and 26 for a crossing signal. I tend to use 8 and 34. We also have here the brown line, which is a simple moving average. It's a 20-period, the middle Bollinger. So I have Bollinger Bands. I have some moving averages, the 50 period and the 200. None of that's really that important. What we want to focus on is the broader trend. And oftentimes, a general rule is if you're confused, you're not really sure what's going on, you want to kind of step out one time frame. You're in the daily chart, go to the weekly, even weekly to monthly. But here on the weekly chart, what's interesting to me, and if you go back, this is episode 6. If you go back, we had talked about what I refer as the primary uptrend support, the 8 EMA. Ever since we broke over that 10K level, that had been support on pullback. So that had just been kind of an auto, buy the dip type zone. We started to get some warning signs up here. We had the breach, of the 8 EMA with the candle wick, but we closed above on that 8 April 12th week, and then we closed below. So let's talk about key levels. So weekly EMA 8, we closed below, we closed back up above. So remember, keep that in mind. So weekly EMA 8, we've been focusing on and talking about the daily MA 50, right? That's been an important level to watch, that orange line. And when you're thinking about using moving averages, you don't want to just move around and pick a moving average that suits your bias. You want to listen to the price. And I would stipulate on this chart that the price is telling us to pay attention to the 50 MA. Support, 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 right? So it's a well-established level. And when we look at this price action, middle to the end of April, after we had that, what some might refer to as an up thrust, or a bull trap, essentially, where you break up above resistance, you can come back down. Right. So after we had that, we had the pullback, and then we had the 50 MA violation. So we got our first close below the MA 50. That should put you in a defensive posture. I often talk about the idea that you want to look for a clear signal in the chart. And if you can go back, and that's the first time we had closed below the 50 MA on the daily chart, all the way back since, you can go back. We're talking about like that 10K area. So that was something to pay attention to. So you had the weekly EMA 8, you had the daily MA 50, and of course, kind of a shorter term, time frame that a lot of traders use, the 4-hour. And we have been talking about the MA 200, the 200 moving average. And you can really see how the price was respecting the 200 moving average, right? You think about it that way. Is the price respecting it or not? Support, 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 a little bit of chop, but support, right? And then we see again over here, pardon me, over here, we have support as well, and support. You kind of get the picture, right? So as the price had been accelerating and consolidating, and if you think about it this way, we had a series of reasonably sized corrections. We had like a 30%, 27, like 18. We had these reasonable kind of consolidations in the middle of the channel, which is healthy, from the upper Bollinger to lower Bollinger, upper to lower. And what that was doing is you kind of zooming in, when you were zooming in the lower time frames, you were seeing that it was using that MA200 as support. So signs of caution, right? Your job as a technical analyst is to identify the trend and ride it as long as it's profitable, all the while looking for signs of weakening. So signs of weakening: weekly EMA 8, daily MA 50, and the 4-hour 200 MA. Now we have a concept called a pullback, which is a bearish retest of broken support. Broke through, right? The pullback and the rejection. So fell down from that level, right? Now, what was interesting is we can zoom in a little bit, and there's a concept. You'll see this a lot in these double bottom type formations, or not just necessarily a double bottom. Don't get too hung up on naming something, but you have two lows. And oftentimes you'll observe that that second low will dip just below that first low. And that happens, it's like a stop loss hunt. So you have the traders who entered here, and they bought in on that lower Bollinger dip. They bought in on that volume. Maybe some type of divergence was present, and now they're up here. They're doing well. They're identifying some type of a lower high. It's their stop loss. Maybe it's here, but a lot of them would have kept their stop loss right there around break even. So you get that initial bounce, the mean reversion bounce, and that rejection to moving average support comes back down, and then you flush. So we get the stop loss hunt, and we get that lower low double bottom type. And that really just forms, a bull thesis, a bull theory would be to look at this as an inverted head and shoulders continuation, right? Shoulder, head, shoulder, and some type of a measured move. With your neckline, you could either use some type of a descending neckline like that roughly, or you could perhaps identify kind of a more horizontal zone, which I think would be a little bit more conservative. But regardless, you could, this is again a bull thesis, very roughly the height, of the head to the neck baseline, right around 64K. And what's interesting is if this does complete, and we get that measured move from that inverted head and shoulders continuation, we'd be setting up for that kind of potential double top, or at least or a second attempt to really break through that level. So it's a really interesting price action here. I want to be bullish, but I need to see the price really closing above and holding that MA 50. And we see it's kind of hanging around, it's playing with it. It's kind of pretending, it's not pretending, but it's trying to do it. And today's candle, we have 50 minutes left. We're looking at a shooting star candle, but you want to think about context, like a bearish reversal candle here in the middle Bollinger, middle of the channel. It's not as valuable, right? I read about this in my book. You want a bearish reversal candle up here, and you want a bullish reversal candle here. You need to think about not only the volume behind the candle for the signal, but kind of the context, the position in the channel. So that's something to look at. So for now, we need to continue to watch those key levels: daily MA 50, 4-hour MA 200, and kind of, if you're just thinking and stepping back and you don't like to get nervous, you just want to watch Bitcoin and look at the broader trend, go to the weekly chart. It still looks beautiful. Nice clean uptrend on the weekly chart. So nothing really to worry about on that time frame. And you could perhaps argue that we're in the early stages, maybe of some type of a bull flag, the falling channel after the advance, after that kind of move up. So continue to watch EMA 8, daily 50. But really the belle of the ball, the just amazing is Ethereum. I mean, what do you do here? Look at that 3,400. Are we going to get a dip? You just don't chase. It's something like this. It's so frustrating if you're not in it, because you see it, and this is a Maribozu in candlestick theory. No shaven bottom, shaven top, no wick, just a pure, beginning to end green candle, green power, bullish power. But you got to be careful. You want to be identifying a level. You want to buy a dip in an uptrend. You want to be buying weakness in uptrends. And we're above the upper Bollinger here. Everything is super hot. Yes, there's no indication of any kind of pullback or any kind of weakness in any kind of time frame at this point. But if you're going to play this, I would suggest that you want to identify a level to buy on, some type of a retracement. We see that Ethereum as gorgeous as this run has been, has given us a couple times now, at least in this little area, this little time frame, beautiful re-entries on broken resistance. So we're going to mark that level, and we're going to mark this level. And if you could kind of think about the psychology of the market, after you clearly identified this resistance, some type of ascending triangle type consolidation, you broke through. At this point, we're at 2,000, and everyone's enthusiastic. And this will kind of lead into our lesson of the day in a minute about social media, but everyone's enthusiastic. And you're thinking, I missed it. The patient buyer, the dip buyer, the value buyer had their bid right around 1,400 because they paid attention. They understand that broken resistance will become support. Very oftentimes you get that throwback, the bullish retest. So right there, okay, you were patient. You got that beautiful 1,400 entry. And at that point, that represented, like a 34% retracement from those highs. We were up here about 2,500, and look what happened again. You got another beautiful. So you broke through the resistance, you broke through, and you got another shot. You got two shots there, two throwbacks at kind of 2,000, 1950 area. And at that point, let's just for fun, let's just see what type of a retracement that represented. It's like a 20%. So at this point, I'd like to buy on a dip. It's not revolutionary. It's not like that. No one's ever thought that before, but you want to give yourself a level you can buy such that if that level fails, you can abandon the trade without marrying it, without just kind of holding on to it. So if you tried to buy up here, now it's done 3,000, 2,700. As bullish as it is in this market, look, it's up like whatever, $70 since I've started talking about it, but you get violent pullbacks. It's crypto. You want to buy uptrends on the dip. So I'm going to stick with that. Let's roll into our lesson of the day. Lesson of the day, dangers of social media. This is from my book, Trading Wisdom, 50 Lessons Every Trader Should Know. Chapter 21, I believe. Dangers of social media. So it's very easy to be influenced on social media by traders that you admire. And you see, if you think about it, you see some traders and you think, man, they're on fire. They never post their losers. And if you just try to follow their entries, you don't know when they're exiting their position. You don't know what their risk threshold is. Are they playing with money they can afford to lose? You don't know how that's affecting kind of how they're approaching, what they're doing. So you need to take everything with a grain of salt, and at most, just look for trade ideas that you can then pass through your own filter, because there's something called the shiny object trade. You want to avoid that shiny object trade. You're having a tough week. Your trades are going poorly. Can't seem to get, you just can't seem to make it happen, right? Everything you try is failing, and then everyone's tweeting. Everyone's tweeting about something you've never even heard of it, but it looks great. Boom, I'm going to go. Don't jump in. You need to play what you've been watching. Familiarity with price action is extremely important. You want to play the charts that you're familiar with, because you'll understand the texture of the price action, the supply-demand balance, a lot better. So avoid that shiny object trade that you see on social media. Avoid copying people on social media. They're not posting their losers most of the time. A lot of them are, they're not being honest with you. So just be really careful with that, dangers of social media. So Ethereum, we'll jump back into a little bit of TA here, and we'll bring on our guest in just a few minutes. So Ethereum has been just unbelievable. There's some other fun ones to talk about. Let's just kind of, let me just jump over real quick. Let's take a look at Dogecoin. Doge is at 44 cents. Wow. So we are what I would say we're testing the top of the channel here. That's not really too hard to see. You see kind of the price. So we listen to the price. The price is telling us this is an area of resistance. It's an area of supply, 45 cents. And we're right back up there. We're testing it. We're testing it with power. We're testing it. Not a lot of volume, but it's just a clean movement. We have this recent lower high break. The thing about this chart, I mean, you can understand obviously what's going on with social media and Elon Musk and the army of people, but you can look at the volume. You can ignore all that and see that all this volume, all this accumulation, pretty much look at these red candles. There's not a lot of volume. So you can see that this was accumulated and held onto. So when I scan through and I look at the health of a chart, the momentum, you can kind of look at that volume. You can look at the candles. You see this beautiful pullback or retracement to that 20 MA, even the EMA 34. But that brown line, that 20 MA, was like the first time since, 5 cents. That's what you want to be looking for. You want to be looking at the volume, seeing what volume the candles are on, and you can get a sense. And that gave us a little bit of confidence that this was likely going to continue. And as it was consolidating, you were able to mark levels, horizontal levels, such that you could kind of initiate a trade. Once you have kind of these two candles here, letting 29 cents, you could play the break of 29 as your entry. You can do stuff like that. You can see also the price did that here a little bit as well, establishing this level, right around there, right around that 33 cents. It'll be interesting to see what it does here. I'm kind of a Scrooge, so I think it probably will initially reject and then come back, maybe catch that moving average support, the 8 EMA, maybe even give you another dip to 34 cents. So it will be interesting to see what happens, but I would fully expect this to continue. Trends tend to continue. As a general rule, if there's a jump ball situation, you give the edge to the trend that is currently in force. In this case, it's a bullish trend. So I would really expect Doge to continue. Another really bullish one is Sol, SOL. This is an opportunity to talk about the concept of relative strength. And you see on Sol and Ethereum as well. I mean, Sol just doesn't care what Bitcoin is doing. Many of the other alts, when Bitcoin is having those pullbacks, having those retracements, you're seeing that in those other USD pairs. You're not really seeing that in Sol. Sol has been super strong. And look at that. The patient buyer, what happened there? You got a great buy, $21. So, these are low ball bids. They're probably not going to fill, but, you might as well throw in a low ball bid on these really strong plays, because if you fill, you're in a good play, you're in a good position. That's a good risk reward, setup. Is this going to come back to 40 or 32? I'd say probably not, but it's crypto, so violent moves can happen. Volatility is what traders want, and if you mark, if you're in Sol, you probably like it as bullish. And that means you want to buy retracements. You want to buy weakness in an uptrend. So you mark a level and then you're prepared, right? You don't panic. So it's up here at 46. If you get down to 31, especially if it happens quickly, you will have confidence buying here because the price is telling you this is an area of significance. You could even see this moving average, the EMA 34. This yellow line. So you might get what's called a bullish confluence, which is kind of a combining or lining up of more than one data point. And you get kind of these horizontals. It's kind of horizontal support zone right here and the EMA 34. So that would be a great buy, right? So you maybe throw a low ball bid there. But for right now, it's a nice clean uptrend, even with the RSI hot. Look at the RSI dipped down to 60, you barely got that EMA 34. So it is cooling off a little bit, but this thing is probably going to continue. You want to be in a position to buy the dip. You maybe even would start to speculate up here, right at that level, and maybe enter around 40.5, have your stop loss just below 40. You could play it in that way. So that's a really fun chart. It's nice to see that they're bullish. We have our guest, Alex Krüger, coming on here. I'm really interested to hear his thoughts on the market. We're going to talk about price action and stuff that a lot of stuff that I don't know about. So do we have our guest on deck circle?
We do. I'm going to bring him on right now.
Yeah, let's go trader talk. All right, Alex, are you there, my friend?
Hi, how you doing?
I'm doing great, man. What's that on the background? You got all those cool charts there?
It's just nothing special. Just my...
Yeah, just your setup there. That's a pretty cool thing. So, Where are you in the world? Are you with us here in the state? Yeah.
Right.
Alex, let's try messing with your mic a little bit there. Let's try to change your mic setting if we can.
That's
see if you can
like
switch to a different.
camera here.
Yeah, folks, we'll get this fixed here in just a second.
Here, let me try something.
Okay.
Let's see.
Hello.
Hi.
How does it sound?
Maybe just go on to a different mic input, within the studio here. That little gear setting on the bottom. Try that.
Okay, how about now? Did it change at all or not?
That's better.
Much better. So,
Okay.
Alex, how are we feeling, man, about Bitcoin here? It feels like Ethereum has really been kind of stealing the show. And, so is it going to take over? Like, what's going on, my man?
It's happening what is supposed to be happening. We have Bitcoin is a low beta asset first, and secondly, we have a lot of things happening on the Ethereum space. A lot of things. Today we had the eBay news, which I think are massive, and then on top of that, we have the change in the protocol coming up soon in the summer. So it's basically doing for once doing what it's supposed to be doing, and it's very encouraging and it's great. I mean, I'm very sorry for all those who are 100% allocated to Bitcoin in the crypto space, but this is it's an easy to trade market, and it's happening. Everything is happening the way it should be happening for those who have a game plan. So yeah, it doesn't mean that I'm not bullish Bitcoin. It just means that Bitcoin is supposed to be lagging at present.
Yeah, it's amazing to see the growth of Ethereum. And from what little I know, there's all these things being built on it. It's kind of it's the grease. It's the liquid in the gears that lets everything go. But I don't know anything about new protocol. I don't know. I don't understand DeFi. How deep are you? Do you trade stuff? Do you DeFi? What do you like to do with that kind of stuff?
I like to do everything that pays. I literally do everything, from basically positional trading to scalping sometimes. Scalping is really time consuming, and there are so many things going on these days that I moved away a little bit from scalping. Definitely, scalping is usually something I reserve for liquid assets like Bitcoin and Ethereum and ETH. On the DeFi space, it's mostly about basically getting into positions of small caps and things that have very high potential very early on, and then just weathering the volatility. I mean, just waiting, because it's it's really easy to move the market. You become the market very quickly. So have to be careful about that. Have to be mindful. But that aside, I mean, it's for the liquid pairs in the DeFi space. It doesn't. Aside of the liquidity, there's not much of a difference. You still get the same kind of pullbacks. You still get the same kind of FIPS are extremely effective, and but just on the smaller side of the spectrum, on the true micro caps, I think it's very important for traders not to rely too much on technical analysis, because basically anybody can actually paint the chart.
It's a great point. That's a lot like the penny stock market, right? The OTC penny stock market.
Yeah, it's like penny of pennies. It's like it's extreme penny stocks to the 10th. It's really easy to paint the chart. So at the end, for those who are trading that actively, they really want to just buy pain and hold. The one thing there is that when you buy in pain and DeFi, you really need to make sure that you're not getting into a scam or a rug pull or things like that. Because if you do that, I mean, you buy in pain, but there's more pain ahead.
So I'd love to explore that. I'd love to explore that a little bit. How do you know? Like, how do you know what's good? You put out a great tweet, which was like 11 or 12 things, to kind of research a project. And I looked at it, and the only one I know how to do is the technical analysis. It's really funny. It was like 1 through 10. Number 11 was like, look at the chart. So how do you do that? What's the best way to start?
The first thing is for many of us in the space is we are getting a hit by names, like every day, every hour, just names being thrown at you, and it becomes hard to choose which names I'm going to pursue and which ones I'm not, and then you have to move kind of like really fast. So the first point there was basically the way you start is with CoinGecko, and the first thing you do is you take the address of the token, so you know exactly what you're looking at, and the rest is mostly. I mean, yeah, it's that thing. It's like one thing important is on the last step. It's not just the chart. Contrary to other trades, to regular non-DeFi assets, you really want to see how it's been trading and study the last few, like 100 trades. See which whale's been trading. Is there a pattern? Is there no pattern? You may find that basically, actually, maybe 70% of the volume is just one guy. You can find that it's actually. Is it new holders? Is it recurrent holders? Is it whales that are going in and out? Is it bots? Is it sandwich bots? It's quite a few things there.
So what was your first crypto? Like, were you like, I mean, and how many years ago? And did
Bitcoin
you know
in 2013 June.
what led you to it? Was it a friend? Was it you read an article?
I'm Argentine, so as Argentines, we have a thing against the over encroaching state for a good reason. And I'm an economist as well, and I like to think wild ideas. So back then was basically tripping with some friends. Literally, the world is tripping, like getting really excited about basically the euro collapsing, and hey, this new thing just came up, and it's very promising. That's more or less the way it went.
You folks make some great wine as well. I'm a Malbec fan, so I just want to put that up.
We do. Yeah, I have good friends in the industry.
Yeah. Okay. We'll have to connect. I love me some wine. So, but what was it like back then? You know, it was really hard to get Bitcoin. You had to know how to set up your wallet. You know, what was it like? You know, for me, it's easy now.
I was just a holder back then. There's no trading for me.
Mm-hmm.
I got into trading actively early 2017. So it was basically Mt. Gox. That's what it was.
Wow. So you've seen it develop kind of from the beginning, from the embryonic stage.
Yeah, I mean, yes, I have.
So it's interesting. For myself, I really only started looking early 2017. That was kind of my first introduction to it. And so it's funny, and people say, "Oh, you're an OG." I'm not an OG. Like people like you have been around the beginning. I'm still, I have a lot to learn from you folks. And by the way, thank you for coming. I feel like maybe I jumped in the middle of kind of the early stages, and it's fun to see now the adoption. And so, what are your thoughts on adoption, institutional adoption, kind of how it's been going, and how maybe you think it might go in the near future?
Yeah. First of all, I want to say that it's everything that we've been living through in the last year. It's kind of like, not kind of, but what COVID basically made like 20 years happen in 1 year. I mean, this was all meant to happen eventually, but it was meant to happen, also fast, but like progressively through time. And we just got hit with this thing, and the world moved very, very fast. So adoption was incredible. It all started with basically a year ago. Exactly, it may actually be exactly a year ago. The Paul Tudor Jones memo, where he announced his position. It was actually really funny because everybody in the crypto Twitter space started talking about how he already got liquidated. He's dumping on us and things like that. It's like, no, this is a macro trader who doesn't announce a position like this to just basically scalp in and out and just dump on you and get out in a few weeks. But he basically removed the reputational risk of everybody else on the institutional side, and he triggered this wave, which at the end, the next big trigger was first Michael Saylor, and he basically did the same at a different level in a way more aggressive way, very effective. And my hats off to him. It's been I was a critic at first, but it's incredible what he achieved. And the most important thing, I think, was PayPal. If you look at the chart, the run started exactly. I mean, we can find all sorts of little things that tell us how this was starting, like BitMEX going down. Well, not going down, but the BitMEX news and a few other things. But the one thing that changes the chart and gets the whole thing roaring is the PayPal news.
That's interesting. Is that why? Because it brought it to more people. It made it kind of more mainstream, right?
It's kind of like a wake-up call of this is happening, and this is happening fast, and it's not just asset managers. And now we're gonna get the masses, retail, like everybody, retail, and then everybody. The fintechs are gonna come behind. As far as adoption goes, I think actually the eBay news is beautiful in the sense that it tells us that this is what we don't need to know that eBay is going to be buying. We just need to know and understand that given the market circumstances, news like eBay will continue happening on a regular basis. Some are going to be in the know before the news. Some won't. Most of us won't be on the know, but we need to expect these kind of things to come out of nowhere and make us go like, holy thing, it's happening again, like the Tesla thing. Okay, Tesla happened. We got a lot of sort of heads ups from people saying that this was going to happen, but still, it was a surprise. Especially in the size that they went in, but it shouldn't have been. It's like we need to be expecting big news to hit us on a regular basis. I think institutional adoption, corporate adoption, and retail adoption are going to continue for a long time.
So, I mean, that's all stuff that gets me excited, right? And I wonder, what are the things, what are the pitfalls, what are the potential dangers to the space? That you think about. You're an economist. You've been around a long time in this space. You know, what is it? What could derail the train at this point?
I think there are two things. First is the regulatory side. I think it's overblown. There's this fear, deeply entrenched fear, mostly among people that are actually not in crypto, but also people that are in crypto, of how regulators are going to come and just crush crypto. And they cannot crush crypto. They could sort of make it really hard for DeFi, but not for crypto as a whole. In fact, some areas of crypto like Bitcoin and ETH, it's mostly Bitcoin, would actually, after the initial impact, benefit for more regulation, because what would happen is, an extreme regulatory approach would drive a lot of volume more towards regulated exchanges. And the one thing, the main reason why we don't yet have an ETF on Bitcoin is that what the SEC requires is for volume to be, to basically for Bitcoin markets to be of a significant size, which is subjective and undefined. But the more volume we have in the CME and the US exchanges and in US OTC desks, and the less volume we have in the likes of Binance, BitMEX, and FTX as well, the more likely we are to get an ETF.
Interesting.
So it's bad, but it's good in a way. So it's like a coin. Every coin has two sides. There's also positive things coming out of that. Go ahead.
No, absolutely. I think that's a great point. And and sorry for interrupting, but what, like 2 trillion? I've seen people talk about Bitcoin needs a 2 trillion, you know, not just the crypto, but Bitcoin itself, you know, something at least a 2 trillion market cap for an ETF. Is that kind of a ballpark, you think?
I don't have a ballpark, unfortunately.
That's good. That's good.
Don't have like targets and numbers like that in my head.
No, I like that. People ask me for a price target, and I like to stay in the moment. I like to kind of see how the story develops, and it sounds like you're doing that. You said you were critical of Michael Saylor, or you were initially critical, and I'm curious why you were. I think that might be interesting to hear.
It's because basically what he did is overstepping the boundaries of what a corporate treasury is about. A corporate treasury is about basically managing their liquidity and making sure that assets and liabilities are matched and everything is working, going smoothly towards the objective of doing of fulfilling their business, whatever their business may be. So each company has a business, and their job is the business, not managing the treasury to speculate. So in traditionally, we think of corporate treasuries as an arm that basically should not be speculating, but just making sure that all the money is being used in an effective way, and whatever money is not being used, return it to investors. So in the traditional way of thinking about it, what MicroStrategy would do actually is any excess cash, return it to investors and let investors invest in Bitcoin if they want, or invest in Unity stock or whatever, So he changed that entirely and disrupted it, and the approach he took is entirely different. And in a way, it's brilliant because what he did is regulatory arbitrage. A lot of parties did not have access to Bitcoin, especially even more so back then. So he offered a lot of investors access to the Bitcoin market through his structure.
So do you think that's a hit to GBTC? Now that we have the broader Bitcoin exposure, like PayPal and Square and some of these other, equity names. I think a lot of people talked about, the premium on GBTC and now negative premium. I'm sure you're familiar with that. Do you think the money's flowed away from GBTC because of these new, vehicles?
Oh, definitely. The primary issues on GBTC has stopped dead on its tracks. You can actually pull up some charts and see that they stopped. And it makes reason they stopped because basically what GBTC was attracting inflows on the primary market of people basically arbitraging that 20% same annual spread that you had there. Basically, GBTC traditionally and for many years, say 2017 till December 2020, traded at an average of 20% premium over net asset value on average, going down to 2017 up to 23 was really stable, and that basically was attracting all of these inflows. But these inflows, this is a misunderstanding I think the market has. These inflows were not really the main driver of the market. The main driver was the demand for GBTC on the secondary market, because that demand creates the premium. If you don't have demand in the secondary market, you have no premium, which basically is caused by primary issuance, primary demand lagging because of the way the vehicle is structured. So basically that disappeared, but you see the market kept on going up, and it's incredible actually to watch how the market goes and finds a thing to focus on and be concerned to death about for X amount of time, and then you realize actually wrong.
I love narratives.
The big picture.
Yeah.
I mean, this meme of number go up it's a good meme actually, because it's true. It helps people make money.
You're right about it. A lot of people, and sometimes it's self-fulfilling. A lot of people thought with the negative premium that GBTC would bring down, Bitcoin, but that just didn't feel right to me, from what little I know. And it's interesting to see that decoupling. I'm curious to hear your thoughts on, like Dogecoin. What are your thoughts on Dogecoin? I won't really color it too much. Just
I'm long Dogecoin. It's something that I think I'm very happy for whoever made life-changing money there. A lot of people did. It's a wonderful and fascinating social phenomena driven by Elon Musk. The way I see it is Musk is he's a fuck you man. That's what he is. He's all the time out there in Twitter telling everybody of the establishment to go and fuck off. That's what he's doing outright. And this his Dogecoin fixation is a way of making a mockery of financial markets and the SEC. That's what he's doing. And in the meantime, making a lot of people make money and becoming like growing his reach even more. Now, the risk with Dogecoin, there's two risks that are intertwined. One is that it attracts a lot of scammers and pumpers, and there is clearly orchestrated pump dams behind the scene. And the other issue is that this attracts a lot of unsophisticated speculators that in most cases what they do is they buy the top. Why? Because people always buy the top. Why? Because that's how tops become tops. if most people don't buy the top, it is not a top. It just keeps on going up. So they got lucky in, like, we already had a very big top. We had two tops actually, and then price kept on going. 3 tops since this thing started. And they got lucky. I mean, but a lot of people bought it. Like the second top was about like 8 cents, and under normal circumstances, that would have actually collapsed all the way down to 2 cents.
Exactly.
But these are not normal circumstances. You have Elon Musk pushing and promoting it, and hey, there's no intrinsic value in that sense. In the traditional sense, that thing can literally be worth whatever. It's just a matter of there being enough demand.
So isn't there also the issue that like 2 people own, like 60% or 40% of it? And isn't that almost so much that could overwhelm whatever Elon could do? Even as much as Elon can pump.
Absolutely. Yeah, absolutely. So that hasn't happened yet, but it can happen. Quite likely someday it will happen. It's a matter of seeing how it progresses. It's clearly reaching its late stages for me, but still has room to go. And we have now, for those focused on the short term, we have Elon Musk coming up with his, I think he called his SNL appearance soon to the next Saturday, the Dodge Father, which is a wonderful name.
Mm-hmm.
So actually, sometimes there's easy money in these things when you just know, like, hey, when that happens,
they're
gonna pump it.
It's interesting.
Just get in before and make sure you don't get stopped out in the meantime, and it's gonna pump.
I think it's interesting in these situations. You see it. So what is it? Saturday night? I think you probably see the peak of the pump Thursday night, Friday night. You already, you know what I mean? You get the little bit of the sell the news right before the news. So I think 50 cents, are we there yet? I think we'll be 50 cents soon. And I don't know, 60, 70 before the show. And then
40. Yeah, we hit 40 cents today. I think 50 cents is too close. That's why I don't like to use targets. It's because everything is like a moving target.
I love it.
It's not about the number. It's about how we get to the number.
That's wise.
50 cents is too close.
So
like, if you just get in now and close at 50 cents for something that volatile, you're just wasting a good trade because it's too close to the target.
Yep. No, we're at a key breakout level, and in any way you kind of measure a reasonable, measured move, maybe based on the height of the consolidation or something. I'm curious about your technical style, just from my own knowledge. Are you, Elliotician? Do you use classical charting, candlesticks, volume? What are you? Do you mind sharing a little bit about that?
Yeah, mostly no indicators. I use moving averages, and basically it's my what I do is identify the trend, and actually I don't need moving average to identify the trend. Is visible for that. Moving average can be helpful if you're identifying the trend in a programmatic way, which is something I used to do a while back, and I don't do anymore. So for those doing it discretionary, on a discretionary basis, you don't really need an indicator telling you this is the trend. This is evident. So one thing is identifying the trend, and then the other thing is basically trying to identify where the stops are going to be, where the liquidity takes place. So I like putting positions on, and then basically scaling. My positions are driven by basically my many years of trading, Like I have ways I specifically like to execute my different setups. But that's for getting in. I may scale in, but oftentimes it's just a one in. But getting out is really difficult in general. Getting out is really difficult because especially when you're trading up, because you can always keep on running. So I like scaling out and taking profits in a progressive way at key points, usually trying to, when I'm very active on the charts, I'm trying to basically do that when we get a stop run, basically. And the targets are basically, in my mind, is where I think the next stop run is going to happen. Like, for example, right now, it's, say we get a Bitcoin is 57K. So if we assume, like right now, I have a very I'm not trading much short term these days. That's one thing, and the other thing is I'm not that long Bitcoin. It's mostly ETH and other things. But say Bitcoin right now were to be going to 60K. If Bitcoin goes up to 60K in a straight up candle, like from here, like this, and there is no news, then I'm looking to take a heavy and assume that I have things exposure that I want to take profit on, and I'm not too light on my exposure. Then I'd be looking to take partial profits on the break of 60K.
I'm curious to hear your thought. Sorry,
Yeah,
and thank you for sharing your how you approach it. I think it's interesting to hear how that's developed, and some people have 20 indicators, and some people just, like you said, you're focusing on the trend. Do you think, considering the supply-demand balance now, where I believe that more Bitcoin is being pulled off of the exchanges than is being mined, right? Do you think we could have, and I ask everyone this, do you think we could ever have an 80% correction again in Bitcoin?
I don't think so. I don't think so. It's a different market, different players. This deeper markets, much more liquidity. Many players that came in are of the accumulator hodl kind. They're just gonna buy more if it tanks too much. Yeah, I don't think so. It's mostly about liquidity and the kind of players that came into the market. 80%, I think, is ludicrous. Still possible. Ludicrous things do happen. COVID happened. It's like, yeah, it's just,
yeah.
This cannot happen, but it happened. But yeah, I think it's extremely unlikely that we see another 80% correction in the history of the asset class.
I'm with you
Just
on
like
that.
we haven't seen a 50% corrections again in stocks, they just don't happen.
Is that because of rotation in the broader markets? It's really just growth to value, and is that why we're not having those bigger corrections?
Well, it's mostly the Fed right now. It's the Fed put. They made it very clear that they're going to allow these orderly markets up to a certain point, at which they are the buyer of last resort, either directly or indirectly. So far, indirectly mostly, but excuse me, that's in the equity side. On the bond side, they just can't buy it, and everything is correlated at that level, highly correlated, especially during panics. So yeah, we have that buyer of last resort, like it or not like it.
Yep.
People are whining endlessly about the Fed doing this and doing that. That's good if you're selling newsletters. If you're trading, you just accept it, understand it, bitch about it while you're having a beer with your buddies, but then try to make money out of it. That means that basically we have a very strong trend, and every single dip should be bought. It's a matter of time frame than an execution.
That makes a lot of sense. I think that goes back to the idea you want to buy dips and uptrends, as you pointed out, and that backstop is fantastic. Like with Bitcoin, I wonder where that, we don't have that Fed, but we do have institutional interest and the retail hodlers. I think maybe 42K might be kind of a pretty strong floor. Do you have any thoughts on that? If we were to maybe go to 60, and I know we shouldn't really kind of project too much, but I've been kind of eyeing 42K area, given the recent weakness.
My levels on the downside are 46.5 and 42.5. Those levels are based on FIBs and based on volume profile. Volume profile is basically just for the public. There's no esoteric thing, but volume profile simply distills and condenses the information that you already see on the chart in a different way, and makes it very easy to visualize and pinpoint basically levels and, more importantly, gaps. So if you look at the profile of Bitcoin, if it breaks around 46.5, then you have a gap.
Yep.
And interestingly, that gap, it's easy in this case because basically we have a level, I think it's 46.9, the level the FIB is there, which was incredibly exactly where the bottom was. But beyond that, and by the way, I say 46.5 because I'm usually thinking that those exact levels are going to get run over a little bit. But then beyond that, you just have a huge gap, which interestingly coincides when the volume kicks back in, it coincides with the next FIB. So those are the levels on the downside. I'm not thinking about them at all. I'm not planning for that to trade. That's really going to depend on how the market behaves from here on. I'm focused on basically staying fully long and as long as possible for as long as I can, and try to basically manage exposure to stay long. And for as long as the market doesn't get too hot and too overly excited, which is something you can see and gauge by looking at funding rates, I'm cool.
I wanted to ask you about that actually. Can you talk a little bit about funding? It's something I'm not great at explaining. You know, what do you look for? What stands out to you in certain situations? Just briefly on that topic.
Funding, basically, there are two types of funding, or it's all the same thing. It's basically funding in the present and along the curve, what kind of exposure you want to have. It's all interconnected. And the funding we on the market looks at the most, and it's actually the most meaningful one, is the short-term funding determined by basically the perpetual swaps on Bitcoin, which is the most liquid market in Bitcoin. That funding, basically what it does is a positive number on that funding rate means that that's the interest rate that longs are paying shorts for the privilege of being long. So they basically have X amount of money, but they want to have an exposure of 10x that or whatever. So they got to pay that thing. That's depending on the exchange, is going to be paid on an hourly basis or 3 times a day, etc. And that funding, you can annualize it and get an interest rate. It's annualized, it's not the effective rate, but it gives you a glimpse of how crazy the market can get, because sometimes funding rates get up to 300% annualized. And it's like, okay, that means that basically if you just keep that position, you buy that and you keep that position, if the asset doesn't go up by 300% or 2x, that means that you're going to lose money. So you need to go up by 300% or you will lose, in a year, you will lose money. That tells you this is unsustainable. So the funding rate is a great contrarian indicator for basically managing exposure. And the way I say it is you trade with the trend on the longer time frame, but on the shorter time frame, you trade against the funding. When it becomes extreme, it's important to not read too much into it. And when it's kind of flattish, like ignore it. It's just when it gets to the extremes. Very negative. Not very negative, just negative. It's a great way to buy dips. And when it gets really positive, it can keep on running, it can gap up, but start taking profit, because that's not sustainable.
Wonderful. I mean, first of all, thank you again, Alex. That was really interesting. We are wrapping up in a few minutes, but I've really enjoyed listening to you. This is our first time talking, and I started to follow you, I know, 6 months ago. And I'm drawn to things I don't understand, and a lot of what you're talking about I don't understand. So I'm enjoying that. And I think it's excellent that the knowledge you shared. For the Benzinga audience, folks, you definitely want to hit that thumbs up and that like button. Is there anything you want to say before we kind of say goodbye to everyone watching tonight?
No, nothing. Thank you for watching. And thank you for having me. And yeah, it's been a great pleasure. It's been good. Thank you.
Awesome, man. We'll let everybody know we can definitely find you on Twitter at Kruger Macro, folks, and we'll have that link as well. In the link. So once again, Alex, thank you for coming, man, and we'll see you soon. Okay.
Awesome. Thank you very much. Take care.
Take care, my friend. Folks, that was a wonderful interview. I learned a lot. I'll just wrap up a little bit of TA Bitcoin, at the end. But just to remind you, I am on Twitter. I am at Big Cheds. I am an author as well. I did just publish Trading Wisdom, 50 Lessons Every Trader Should Know. You can find it on Amazon. You can think about it as 1/3 trading psychology, 1/3 risk management, and 1/3 technical analysis. I also have a YouTube channel. I don't really post much on there because I do videos, long form videos on Bitcoin Live, where I'm a founding analyst, the best in class educational platform for crypto. I would encourage you to check that out. And also, if you're just beginning, also check out chedstrading.blogspot.com. I did publish this complete beginner's guide back in 2017-18, so check that out as well. But it's a wonderful show. I enjoy doing this with Benzinga. That's episode 6. We have just a couple minutes left. I would say to keep an eye. Wow, what a great interview. Keep an eye on short-term levels. We talked about that before. The daily MA50, the 4-hour MA200, and that weekly EMA8. I want to get bullish again. The way I was before we violated those moving averages, but I need to see them recaptured and held. You can see just on that shorter time frame here, the price is struggling with it, but we're getting these lower shadows where the price is responding to that demand area. And like I talked about before, you could reasonably have some type of an inverted head and shoulders continuation. Kind of maybe there's your horizontal neck baseline. You're getting several opportunities to kind of jump back in here based on that broken resistance. There's your throwback again, your throwbacks. We're getting, in theory, another bullish throwback to that 56.4 level. We've already responded. So I'd like to see that follow through as a bull, but we'll have to wait and see. We're going to kind of take it one candle at a time. Once again, thank you to Benzinga. Make sure you hit that subscribe and that like button. Ethereum is gorgeous, 34.31. We started the show, it was like 33.70. I would wait. I like to buy dips and uptrends. I would wait for a pullback to some type of a reasonable level. We talked about maybe that 25.50 level. If you're a little more aggressive, maybe around 27.80. Can you believe that I'm saying, look to buy the dip at 2,800? I mean, Ethereum has just been on fire. Even Litecoin, we had that lower high break today. We take this high wave spinning top April 22nd, and you can see the bulls accelerating up and above that. So you definitely want to see, if you're a Litecoin bull, you want to see the bulls, hold on to that level, that 290. Still a ways to go to challenge that recent high at 330. Maybe we'll put in some type of a lower high here. Then we'll be on the lookout for some type of a higher low, maybe a tightening range. We'll wait and see. But in the meantime, it's nice to see Litecoin accelerating and getting back up above that level. Spencer, what do we have here? Are we wrapping the show up, my friend?
Yeah, that should be a wrap.
All right. Well, thank you, folks. And we'll see you next time for Making Bread with Cheds.